Talk about the technical setup this morning. We've got Naresh and Kunal in the studios with us. Naresh, hi, morning. Given that it's expiry as well, how do you think today is going to pan out? And you think that climb up to 23,150 that we've made could get challenged?
So we could see volatility due to the expiry, which we've been seeing for quite some time. But apart from that, we continue to be in a band. The good part is we held on to the 22,800 zone, which was a support, and 23,350, 450. That band should act as a resistance for the next two sessions. And we could see a trend change happen over on Saturday or maybe on Monday, wherein we get a much clearer trend in terms of momentum post-budget. So overall, the view is in this period, yesterday, another good part is we saw small cap index recovering above the previous day's highs. So for now, we are back into the range and waiting for the event to get over.
Okay.
Right. Kunal, hi, morning. What is your own sense on what the texture and color of the trading day today could be?
So I think it would be more flattish, more related to the stock specific, because I think it's the expiry day, so you're bound to see some bit of volatility. But I think what we've seen in the last 2 days is a very strong short covering move across indices, across sectors as well as individual stocks, and that generally indicates that we were in that zone of deep oversold territory on the stock specific front, and I think the markets have just tried to correct that by coming back to some sort of a recovery for many of these stocks. Now, what matters is, as a pattern, what we look out for going forward, that whether whether the strength, for example, in the private sector banking names, the recovery in the PSU banking stocks and the bank Nifty as an overall space, whether it sees more legs on the upside. Financial services as a pocket has seen a good recovery over the last few days, whether that becomes a trend in the making. So I think based on the rollover patterns as well as the the data on the F&O side, we would probably gauge that where the markets are trying to just about getting inclined to, especially going into the budget event as well as the next week series of events, including the RBI policy.
Okay. So Kunal, yesterday was long trade. Tuesday was short bias. When a long positioning takes place in the market, it is an indication of fresh up move. So when you say that you expect markets to be quiet, why do you expect the markets to be quiet? Why can't they accelerate? Why can't we see like a pre-budget 3-day move of 200-300 points on the Nifty?
See, because you have to look at when there is cutting of positions, we call it capitulation. We call it the reason why stocks fall off very sharply. When that happens, the risk appetite goes off, and immediately when the markets go into a V-shaped bounce or a recovery process, it's not that as if the traders who have exited their positions, so you've cut down their long positions, they would go back into an immediate buying spree, because they would want to be more sure, more confident of which are the sectors and stocks they would want to bet on, playing into the next big trend for the market as such. So I think when we look at that, we expect that the markets would get back into a normalizing phase. That's a process. It may sometimes take a few days. Sometimes it may take a few weeks as well for the indices to settle into. And if especially we have events lined up, then it may probably take a few more sessions. So I think that aspect, I would believe that we are getting into that phase of normalization, where it's going to be more stock specific. We'll have to find stocks which are more robust in terms of price action. The moves have to be backed by strong volumes. That's the very interesting part to look out for, because what happens is, after a sharp correction on the back of higher volumes, sometimes the bounce is on much lower volumes. That indicates lack of participation and just pure short covering.
Okay. If you like this video, then like, share and subscribe to ET Now.